Hi, welcome to Christensen Wealth Management. I'm Michael Christensen, and thanks for taking time out of your day to watch this stock market update and industry sector review for the week ending Friday, July 27th, 2018. Before I jump into the charts and commentary, I'd like to begin with the quote of the week. This week's quote is from Eleanor Roosevelt. She once said, "It takes as much energy to wish as it does to plan." Those are some wise words from Eleanor Roosevelt. Well, the volatility continues. The market's been in a bullish uptrend since the last video. The S&P and Nasdaq are near all-time highs. The Dow is struggling to some extent, but the volatility is here because it is earnings season. We have second quarter earnings coming out last week and this week in full force. About 1,000 companies releasing earnings this week. And yesterday, one of the 10 largest stocks in the S&P 500, and certainly one of the top 5 in the Nasdaq, lost $100 billion of market value last night. That's a lot of money. I'm not able to say the name of that company because of compliance reasons, but it won't be hard for you to find out which one it was. That poor stock lost 20% of its value from yesterday to today. Well, today we had more earnings, and I would guess that by the time that you see this video on Friday, there will be lots more volatility to see. But most of it is toward the upside at the moment, and the earnings will continue through next week at least. So let's just see if these markets can continue higher. The volume of trading is rather weak. I don't know if you can hear it. There is a thunderstorm bearing down on me out here in the South 40 of the Christensen Wealth Management garden. So I will stop there and get going on the charts, and we'll see you, or I shall see you next week. Looking at this chart of the Dow Jones Industrial Average, we have the 5-day moving average in red, nicely above the 20-day moving average in blue, indicating short-term strength. And the 20-day moving average in blue just crossed above the 50-day moving average in purple on July 26th, indicating intermediate term strength as well. So right now we have a lot of bullishness in the Dow Jones. As you can see, we really started this rally on June 27th, and it is really not backed off any. And we took out this prior high of June 11th and this prior high of March 9th. And the next remaining high is this one here from February 26th, and of course the all-time high up there. So this red line is very strong resistance for the Dow Jones Industrial Average, and of course the top all-time high up there is very strong resistance as well. One of the issues that the Dow Jones Industrial Average is having now is that it's rallying toward the all-time high with 40% less trading volume that it had on that all-time high of January 26th. So typically you can't move higher with 40% less volume. So that is an issue that shows there is not a lot of buying activity. And granted, it also means there's not a lot of selling activity. Overall, it's just 40% less trading. So this may begin to run into some roadblocks a little further down the road, sooner or later. But right now, there are a lot of positive things going for the Dow, and nothing shows any weakness at the moment. Let's go ahead and move on to the S&P 500. Looking at this chart of the S&P 500, you can see that we have been in a nice uptrend since the lows of April 2nd. But we had a recent low on June 27th when we started to take off during the 4th of July week and really haven't stopped rallying. The 5-day moving average in red is nicely above the 20-day moving average in blue, indicating short-term strength. And the 20-day moving average in blue is above the purple 50-day moving average, indicating intermediate term strength as well. We also took out the 3 prior highs, which is bullish, and that is that there. We had the high of February 26th and March 9th, and then the high here of June 12th. We took that out back in about the 11th of July and rallied up to here. So we are currently testing all-time highs. The question is, will it last? We may have hit resistance on the 25th of July, and it doesn't look like it on the chart until you draw a trend line from the high of April 18th to the high of June 12th up to July 25th, and you plant that right there, and you can see 1, 2, 3 touches almost exactly to the penny. That may be the point at which this market starts to turn down again, and you can see that it is in a rather kind of a parallel trend channel here. If I draw this in somewhat like that, I suppose would fit. It's just bouncing between these two parallel lines, and we may have topped on the 25th of July, came down on the 26th of July, and perhaps, just perhaps, we're going to trade back down to the bottom red line here. But I'm watching to see if there's a breakout to the upside, and if there is, then that trend channel will be bullish. Let's move on to the Nasdaq 100. Here's a chart of the Nasdaq 100 stock index, and the 5-day moving average in red is above the 20-day moving average in blue, indicating short-term strength. And the 20-day moving average in blue is above the purple 50-day moving average, indicating intermediate-term strength as well. So right now, everything is looking very good for the Nasdaq 100. We're above all 3 prior highs. This high here on January 26th, and the next high of March 12th, and the next high here of June 20th. So we're up. We made a new all-time high on July 25th, and then fell back down on the 26th after a certain company that I will not mention dropped 20% and lost $100 billion worth of shareholder value. So that particular shock to the Nasdaq 100 looks small on the chart, but perhaps it'll open the door for further downside. We'll see. In the last video, I had mentioned the possibility of a bearish rising wedge formation, and I'll go ahead and draw that in here, and you can see the current state of that potential bearish pattern. So this is the Nasdaq 100 currently, and you can see we have 1, 2, 3 highs here, and then the bounces off that bottom line. So the Nasdaq 100 could potentially sell off the last few days of July and the first week or so of August. We'll just wait and see. But if this in fact is a bearish rising wedge pattern for the Nasdaq, we will likely see additional sell-off over the next few weeks. Here is my favorite industry sector of the week, and that is the S&P 500 Consumer Staples Stock Index. This particular index peaked on January 26th and then proceeded to fall 17.3% to its low, which was on, looks like, May 3rd. And since then, it rallied for most of May sideways and then broke out to the upside the second week of June. So you can see the breakout in this yellow highlighted oval, and ever since that breakout it has been in a very beautiful uptrend, heading higher, and there is absolutely nothing wrong with this particular chart at the moment. Looking at this, the 5-day moving average in red, you can see, is nicely above the 20-day moving average in blue, and if I put the 50-day moving average in there, you can see the 20-day moving average in blue is nicely above the 50-day moving average in purple. So those are both a short-term strength indicator and a intermediate-term strength indicator. And if I show you where the 200-day moving average is here in green, you can see that this particular index is very much striving to get its way back to the 200-day moving average, which sometimes acts as kind of a magnet for investments, and we're not too far away. We're getting very close to it on this chart. So right now, consumer staples is looking fantastic. Very happy with this sector, and I hope it continues doing this for many weeks to come. Thank you again for watching this market update. I hope you found it useful, and before you go, please do me a favor and click on the subscribe button on this YouTube channel, and then click the little bell next to it. so you'll be notified when additional videos are posted. And also in the summary description of the video and in the top right-hand corner of christensenwealth.com, you will find links or icons for the Facebook, LinkedIn, and Twitter pages for Christensen Wealth Management. And if you have some time, please visit those and like or follow them while you are there. That way I can communicate with you through video and through social media throughout the week. Well, have a great week and weekend, and I look forward to seeing you again in about another 7 days. Bye-bye.